has been the buzzword over the past few weeks, with Indian IT stocks taking a hit over growth concerns. Companies have also announced a host of tie-ups to develop the AI opportunity. But how much does AI contribute to the Indian IT sector right now, and why are brokerages still bullish on the sector? Reema has all the details.
Thank you very much for that. Indeed, generative AI, advanced AI may be the buzzword right now, but the actual revenue contribution from these technologies is still in very early stages. Now, yesterday, Infosys at the AI Investor Day said the generative AI contribution stands at 5.5% for the company, which is pretty much in line with TCS at 6% and HCLTech at nearly 4%. But remember, the definition of AI revenue may vary across companies, which makes direct comparisons tricky. But the question is, how will you read this number, AI contribution at 5%? Would you be disappointed because AI has been around for some time, but still the revenue contribution is 5%? Or will you look at it as a half glass full and say, well, it's only 5%, which means look at the significant headroom for expansion from here on. Now, brokerages are still bullish on Infosys. In fact, overnight, a lot of calls came through. We analyzed them. There are 52 analysts, out of which 38 have a bullish call, 12 of them hold, and 2 of them have a sell call. Global brokerages like JP Morgan, Jefferies, UBS, HSBC, CLSA all reiterated their positive call. For JP Morgan, the target price stands at 2,050. For CLSA, it's 1,779. And the bullish stance by these brokerages rests on 5 key drivers. One, the AI-first services opportunities. That is expected to expand sharply. Yesterday, Infosys said it's a $300 to $400 billion opportunity by 2030. Secondly, data modernization is emerging as a key growth driver. Enterprises need partners like Infosys and others to clean, organize, and modernize their legacy data before you can actually deploy AI at scale. Third, even Infosys' collaboration with Anthropic, the strategic partnership, does show that the company is taking steps to remain relevant in the AI ecosystem. Fourth, just talking about the near term, here and now, FY27 macros are looking better, which means FY27 in all likelihood is going to be better than FY26 for all the IT companies. And finally, fifth one, the valuation comfort. For Infosys in particular, it's trading at 18-19 times forward multiple, which is cheaper than the long-term average multiple of about 20 times. So the message from the brokerages is clear. They're bullish, but it is disconnected with what's happening in the market. The Nifty IT index continues to see pain. It's down 15% in the month of February alone. And it's now very close to its 52-week low, less than 5% away. And this is not a domestic story. If you look at the global ETF for software, that is down 22% on a year-to-date basis. But that's about the numbers and the markets. The other worrying thing is on jobs. Now, yesterday, Nandan Nilekani said that on account of AI, 92 million jobs will be lost, but 170 million jobs will be created. But if I just look at the Indian IT companies, in the first 9 months, more jobs have been lost than created. The headcount for the top 4 IT companies is down by 700 plus in the first 9 months. It's on account of TCS and the restructuring that they did. But the question for the economy remains that if on account of AI, we do see a decoupling of revenue and jobs, then what happens to job creation? Back to you.
Okay, all right. Thank you so much for joining us with all those details, Reema. Earlier today, we spoke to marketing